Interview. Joining me on Stockbox today is the CEO of Capital Metals, that's Michael Frayne, and the company is listed in London on the AIM market. And I believe you recently just listed, didn't you, Michael?
Yes, Mark, thank you. We came back onto the market last week. We reversed into a AIM shell, and that was all completed last week and started trading on Wednesday.
Okay, yeah, so very fresh to the market then. So what's the story then with Capital Metals? Where did it come from, and what led up to the market listing last week?
Okay, so Capital Metals has been going for well over 5 years now, and we have a very high-grade mineral sands project in Sri Lanka, which we took from an exploration project, drilled out a resource, have done a lot of what you call the feasibility and project assessment work, a lot of permitting, environmental studies, and so forth. So a lot of the work that a lot of companies do after they've come to market, we've actually completed a lot of that work and coming to market now. So a lot more advanced than maybe some of the other ones that you used to see at this time. And really, the reason to come to market now is that mineral sands companies perform very well in the market generally. Certainly in Australia, and certain companies in London have performed well. And we're in our final stages this year of finalising our permitting and project development plan, such that this year we're looking to fund a complete offtake, put in our project funding to start to construct and build the mine, and and looking to get into production next year. So really, this gives us the platform with which to fund and take the project forward, and we're ready to come to market at that point.
Okay, so you're already quite advanced, like you say, and you've done a lot of work. So the reason to come to market was really to accelerate the process. I mean, you're talking about production next year, so that's pretty quick.
Yes, so look, we've got we are in the final stages of permitting and so forth, and really we're quite a simple project in terms of mining operations, and we can talk a bit more about mineral sands and how the processing things there, because it'll help that. So having done a lot of that extra work there, yes, it is fast. So we're looking, we consider ourselves a near production asset.
Okay, yes. Well, let's move on to mineral sands then. Can you enlighten us as to what mineral sands are and the market for them, and also things like how's the price performance been and what's it looking like?
Okay, so look, mineral sands are really what you call GDP minerals, a bit like how copper is considered part of how the world's going in terms of things, and obviously developing and emerging markets has had a big impact on that. So mineral sands is primarily, there's two main products that come out. There's zircon and the derivatives of that, zircon mineral, and then there's what they call the titanium dioxide minerals, which are rutile and ilmenite. And so zircon is used for all ceramic uses. And so if you think of zircon, you think of bathrooms and kitchens, anything that needs tiling, ceramics, and so forth like that. So you can imagine, if China's building however many number of houses and things like that, they're all going to need bathrooms and kitchens and things. So the demand for zircon is like that. Titanium dioxide is actually the main mineral that is used to make the pigment for paint. So whenever you think of any paint around the world, you think of titanium dioxide, which is primarily derived from ilmenite and rutile. So there are three main minerals that we have. We also have garnet, which is an industrial abrasive mineral, which also has a lot of industrial uses that we have. Now, some mineral sands projects around the world have garnet and don't. They generally have the other three. So we have a nice mixture of combinations there. So you think of the world they all need paint and they all need ceramics. So that's what mineral sands are used for.
Okay, and how has the pricing of these commodities performed over recent years, and where do you see that going in the future?
Well, the pricing's performed very well in all the minerals. Now, although as did happen, in the first half of last year, the pricing did come back a bit. Certainly for zircon, there was a view that because the global demand did come off. But interesting enough, the demand for the titanium dioxide minerals, the ilmenite and rutile, seems to have held up. Principally because, as you can imagine, a lot of people in lockdown, or a lot of people doing things, have been painting upgrading. There's been a lot of renovations and those sort of things. And paint is not something you can recycle. It's not a recyclable mineral, commodity. So those prices are held up. So long term, the outlook is very positive. The prices are strong and they're considered steady. And part of that is this overall theme of why people see minerals in general and commodities looking to go into another super cycle is there's been quite a lot of underinvestment compared to overall global demand. Plus or minus the COVID impact there. And so prices have been strong. They continue to be strong. And there's certainly a lot of people looking for future, locking in new supply, which is what we offer. So there's a lot of interest from off-takers and things for our product.
Okay, so you'll be looking to mine ore that is mainly used in construction and infrastructure building. Is that right?
Yes. So when people talk about stimulus, that really reflects well on us.
Yes, indeed. And what does it sort of look like? Maybe a silly question, but most people know what copper looks like, or coal, or gold. What is it? You call it a mineral sand. Does it look like sand?
Well, yes, actually. So what you're mining, mineral sands, and when you talk about the heavy minerals in mineral sands, they're typically deposited due to a beach depositional process. So that's why they are considered sand. And what we're mining is very close to what were coastal areas, and then that's how they're deposited. So over time, because you talk about the heavy minerals, which is these items: zircon, ilmenite, rutile, and garnet. And so they do look like sand. And our thing is, it's mixed in with, and you may see some photos on our website and things, mixed in with, other things like silica sand and so forth. So it looks a lot like sand, the heavy minerals, the way they occur. Okay. So that's why they talk about mineral sands. And yes.
And what's the process of mining it then, getting it out of the ground?
Well, processing very simple, and certainly for us, because we've got a very, very clean deposit. So which means that we don't have a lot of other sort of muddy factors or things. We've got a very nice depositional thing. So we're mining from surface. It is literally like a quarrying operation, where you're mining sand things. And what happens is these minerals are a lot heavier. Their specific gravity or their density is a lot heavier than the other minerals that they occur with. It's primarily silica or white sand. And you put them through a series of spirals and they physically separate. So the good thing about that is you're mining from surface. You don't need to blast. You don't need to use chemicals to extract. You're just using the physical properties of the minerals to separate them out into saleable products. Okay,
so quite a simple mining and then sorting process.
Yes, and look, there's always you need to you need the right people doing that and putting it together, of course, but which we have. But the interesting thing is that there's no new technology or special method or extremely complicated method of doing that. It is literally using the different physical properties of the minerals to separate them from each other.
And just talking about then Sri Lanka then as a jurisdiction to do business in, but of course also the infrastructure as well. What's the infrastructure like in the area to help you with this process?
The infrastructure is very good, and Sri Lanka has very as a former with its historical ties to the United Kingdom, has a good rule of law. They like foreign investment. Obviously they are used to generating export earnings. Obviously one of their big export industries is the tea industry, which has been going for a long time, and they produce a lot of very good quality tea, and that's a significant contributor to their economy. And they have a lot of good rules and regulations for sort of foreign investment, which they like to encourage. So as a jurisdiction, it's British-based law. There's good services and things available from that side and things. So. And processes to work through that. So as a country to operate in, it's quite easy to understand and to set up for that. In terms of infrastructure for a mining project is very good. And really, our infrastructure requirements are really good access. So there's good road systems and available, access to our deposits and so forth. But actually, what is close is there's actually where we're looking to put our process plant is there's a brand new or very new port that's available, which is just to the north, on the northern part of our project. It's about 30 kilometres from where we're looking to mine initially, by a sealed highway, and which is a port, which is a fantastic bit of infrastructure. Because obviously, as you know, with a lot of these products is when you mine something, that's great, and that can be with coal, copper, all those things, but how to get it to market. And if you don't have to build a brand new port, or you've got easy access to an export point, that's a big infrastructure win for us. So the general infrastructure in the country is very good.
Okay, excellent. Let's just have a look briefly on the economics then of the project. So it sounds like a very simple extraction process, and the infrastructure is already sort of mostly there. So what are you sort of looking at in terms of a capex, and what are you targeting in terms of a return?
Well, look, I guess we're slightly ahead, and that's something we could probably update in the near term.
Mm-hmm.
One of the things we came to market to do is really update our development study and our economic analysis. So we've got, but I can give you an indication that the reason we got involved with this project as a team, we put Capital Metals together, is it's such a high grade project. I mean, our current JORC resource is the average grade of our deposit is about 17.2% heavy minerals. So, within the deposit. And in certain areas, initial areas, we're over 23, 24% heavy minerals, which is fantastic high grade deposit for mineral sands. Now, if you're over 5% or 8%, you're considered a very, high grade mineral sands deposit globally. So we're very high grade. So the good thing about being high grade is then that means you don't need, you can mine less to produce the same amount of minerals, because of the higher grade. So which has capex savings and reduces your capital intensity. So where we're at the moment is our capex, we're looking at around, in the order of, and this is something we need to finalise, but we have, a initial estimate, we want to put that in thing, is around $35 million is what we're looking for. So we're not looking at we need $500 million or $1 billion or one of those sort of projects to get going. We've got a very, very manageable, sensible, bite-sized capital requirement to get into production. In terms of returns, because we're very high grade, our value thing is we're expecting very, very high margins on that. So our IRRs will be, and look, this is something we want to upgrade, then we can probably think, but we'll be well over 50%, and a lot higher on that side. And with very attractive NPV per our capital intensity. So, but those exact numbers, where we haven't put them out yet, because we're that's part of what we said we're going to do is after admission. So we're looking to update the market.
Okay, so the market can look forward to some updates on that front. That's great.
Yeah.
What's the roadmap then, Michael?
Okay, so the roadmap at the moment is we're finalising our first mining license, which is, as soon as we have that in place, we're then really on the path. That's the final permitting step on our path to production. So really, what we're doing this year is we want to get into have commenced construction by the end of this year. Okay, so really what we're doing is we finalise our permitting, and the first thing on that is to finalise our environmental impact assessment, which which is happening at the moment. So we get our first mining license in the next few months. That's and there's some steps that we can update the market along the way for that. At the same time, we've had a number of discussions with potential purchasers of our product. Again, we've had people visit site. We've sent a lot of our samples to things. As I said, a lot of the technical work and all the studies and everything we've completed. We're now sort of wrapping it all up and getting ready to move forward and starting to build our team to bring there. And part of that is the listing to have the platform to do that. So in terms of the roadmap there, it's just finalise our permitting, update our development plan, which has those updated economics that we've discussed, put in place our offtake agreements, and that will link into the funding of the project, the capex put together in that side. And what we're looking for is to have off-takers and other equipment suppliers to provide us with as much of that funding as possible. So we have our requirement to go back to the market is minimal. And then, really get into construction. To get our first construction going it's not an overly complicated thing. So we've set ourselves a sensible time frame to do that. And, hopefully we'll do better than that. But, we're really, there's a lot that's going to happen, sequentially over this year.
Okay, great. Well, Michael Frayne, the CEO of Capital Metals, thank you very much for your time.
Right, Mark, thank you very much.
Thank you for listening to this Stockbox interview. For more information, interviews and videos, visit our website at stockboxmedia.com or give us a follow on Twitter by searching @StockboxMedia.